Let's talk about the exchanges that have exposure to FTX. Just some quick background for those of you that may have been living under a rock for the last month or so. FTX and FTX US, they have collapsed. Sam Bankman-Fried, their erstwhile leader, he is under investigation in the Bahamas for various financial crimes. And I'm sure that's causing heartburn for many investors here in the US. What does this mean for your personal crypto fortune or for your investments in general? A good way to think of that and a good way to find out is to take a look at the exchanges that have exposure to FTX. Let's take a look at those in this video. FTX and FTX US, those are two exchanges that have frozen withdrawals and filed for Chapter 11 bankruptcy. In other words, they're finito, they're done. FTX is under scrutiny from the Securities and Exchange Commission, as well as the Commodity Futures Trading Commission for its handling of client funds. The investigation had begun several months ago, and obviously will continue into the months to come. If you had money in FTX's exchange or were trading using any of their services, you more than likely are going to have a hard time getting your money back. And there have been reports of FTX login portal being unavailable and users having balances of $0 in their wallets. As I'm sure you know, the situation is fluid, and obviously things will be updated as we get more information. What about BlockFi? BlockFi was one of the more famous crypto exchanges. They have frozen withdrawals and filed for Chapter 11 bankruptcy, largely due to their exposure to FTX. The BlockFi balance sheet showed an outstanding $275 million loan to FTX, along with other liabilities and assets ranging from $1 billion to $10 billion. So if you were invested with BlockFi or were trading on their platform, probably going to be some issues getting your money out. Next up, we're going to talk about Gemini. Gemini co-founder Cameron Winklevoss of the Winklevoss twin, very same twins that got screwed out of having investors in Facebook way back when. Cameron tweeted that the platform had no material exposure to FTX, to its token FTT, or Alameda Research, the investment firm associated to and I guess parent of FTX. That was tweeted on November 9th. But on November 16th, Gemini told customers that they might be unable to withdraw funds from Gemini Earn, a program that pays up to 8% rewards on assets customers lend out. Why, you might ask? Well, the problem is with Gemini's third-party lending partner, Genesis Global Capital, which froze withdrawals this week amid liquidity concerns. Those are similar liquidity concerns that affected FTX right before its collapse. So Gemini might be something you want to keep an eye on. Let's talk about Crypto.com. Their CEO, Chris Marszalek, tweeted that the company's direct exposure to the FTX meltdown is immaterial, stating that it amounts to less than $10 billion in the company's own capital. That said, though, the platform did suspend withdrawals of stablecoins USD and USDT on the Solana network, but they didn't explain why. In all likelihood, it may be another instance of liquidity concerns, because as I'm sure you know, crypto has been having a little bit of an issue with its value falling precipitously over the last couple of months. And then, of course, there's Binance. Binance US, the US branch of Binance, which is separately managed, they posted on Twitter that Binance's dealings with FTX would not affect US users. The CEO of Binance posted that the exchange would be forming an industry recovery fund to help otherwise strong projects in a liquidity crisis. Good for them. It seems if you have investments with Binance or using their exchange, you might be okay for now. What about Coinbase? Coinbase CEO Brian Armstrong tweeted that the platform has no material exposure to FTX, FTT, or Alameda Research. How about Robinhood? Robinhood, the platform, NerdWallet is reporting that that service has no direct exposure to Alameda, FTX, or any of its entities. FTT already cannot be traded on the platform. The only thing that might be concerning is that Bankman-Fried, he had a 7.6% stake in Robinhood. I'm sure as any bankruptcy proceedings go forward, he might be asked to give up that portion should he be found criminally liable for some of the losses with FTX and Alameda Research. eToro, another fintech trading platform, they also have no corporate with FTX or FTT. And users of eToro, well, they can trade FTT, but not in the US though. So if you're planning on trading FTT for some reason, and you live in the US, well, you're not going to be able to. If you live outside of the US, then you can, but I'm sure are trying to get out of that position as quickly as possible. And finally, there's Kraken. Kraken has no material exposure to FTX or Alameda and does not support FTX trading. That's information on some of your favorite trading platforms. Let us know what you think in the comments down below. Be sure to like and subscribe and click the notification bell if you need more videos just like this one. I'm gonna get out of here, guys. Take it easy.